For many junior mining companies, the path is always the same. Plan a project, drill, publish result, raise money, and drill again. But sometimes the opportunity is different. It's not a new discovery in the middle of nowhere, but an old mine that someone is trying to bring back to life. That is the story of Titiminas Silver. Titiminas is a new public company focused on Peru. Its asset is Madre Sierra, a historical high-grade polymetallic silver mine in the Junín region in central Peru. This is not a greenfield exploration project with no story. Madre Sierra already has underground working, historical data, infrastructure, social agreements, and permits under the small mining regime in Peru. According to the company, this could allow the project to move relatively fast forward production. But there is still a big difference between a good story and a real time. Titiminas needs to confirm the historical resource with modern drilling. It needs to update metallurgy, a mine plan, capex numbers, a PEA, and a construction financing. So the key question is simple. Can Titiminas take a historical high-grade silver mine in Peru and turn it into a real producer? Let's dive in. Welcome, mining lovers. This is Charlano de Minas, the Spanish podcast dedicated to mining investment, now in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Welcome to Charlando de Minas, the Spanish podcast dedicated to mining investment, today in English. This is the summary of the original interview in Spanish. If you want to watch the full original interview, you will find it in the link in the description, or you can look it in the channel. Today I bring you the English summary of my interview with Luis Gozueta, CEO of Titiminas Silver. This is not a literal translation. The goal is to organize the conversation and explain the opportunity, the risk, and the next catalyst of the company. Luis is Peruvian, but he grew up in Vancouver and later studied in the United States. Instead of going to Wall Street, he returned to Peru and entered to mining. Over almost 30 years, he has worked in contracting services, mine building, mine operation, and private equity. This matters because Titiminas is not being built by someone who only understands capital markets. Luis comes from mining and operations. He says that he knows what kind of projects can become a mine and what kind of project it's only a nice story. Madre Sierra had several things that he liked: historical data, high grades, social agreements, good location, historical metallurgy, and a scale that could work under the small produce regime in Peru. The mine has been operated more than 20 years ago by a large Peruvian company. The data was not prepared under modern Canadian standards, so it must be confirmed, but according to Luis, it was useful data. The project is close to the airport of Jauja, and it's located in central Peru, where polymetallic deposits are common and metallurgy is well understood. In Luis' words, they are not inventing the wheel. They need to modernize the work, but they are not starting from zero. So the thesis is clear. This is not a pure exploration story, it's a restart story. Titiminas has more than 7,000 acres of mining concessions in central Peru. Madre Sierra is the main asset, but the land package includes other historical mines or mineralized areas that could create value over time. One is Janicocha, an old molybdenum mine with historical studies mention very high molybdenum grades. Another area is Quebrada de Titiminas, around 700 meters from Madre Sierra, where the company recently found old galleries and very good first samples. These are not the main focus today, but they could create value later. But as we said, the head of the investment case is Madre Sierra. The historical result is based on only part of the system, main around 300 meters of a strike and 3 veins, but the company's recent work has identified more veins. In 2021, they knew about 5 veins, and today, according to Luis, they have identified 11 veins over more than 2 kilometers of strike. This is one of the key points. If the historical resource was built on only a small part of the system, and if the system really continues for more than 2 kilometers, there might be meaningful upside exploration. This still has to be proven with drilling, but the geologically idea is attractive. Luis explained that a small historical working along the strike are mineralized, so the company believes that the system has continuity. The historical grades are also important. Luis gave approximate numbers during the interview. He said that the historical resource include around 4.7 to 4.8 ounces of silver per ton, around 0.8% of copper, and around 0.8 to 1 gram of gold, plus lead and zinc. When the company calculates silver equivalence value and payables metals, around half of the revenue came from silver. Copper and gold were also meaningful byproducts, and the rest came from lead and zinc. So, this is not only a silver story, it's really a polymetallic story. Silver is the main metal from the investment point of view, but copper and gold are important because byproducts can reduce costs and improve margins. Luis also said that the copper is chalcopyrite, which usually floats well. They have seen some arsenic in some assays, but historical metallurgy did not report it as a major penalty. Modern metallurgy still needs to confirm this. The economic logic is simple. If you have a very high grain mine, you don't need a huge tons to create value. Luis explained that a mine of this size in Peru, with its own plant and access to electricity, could have an operating cost around $100 to $230 per ton. Even with a conservative number, such as $150 per ton, the historical grade is high enough that only a few payable ounces can cover the cost. This is why Luis likes the small producer regime in Peru. Under the current permit, Madre Sierra can produce up to 350 tons per day. With historically grades and historical metallurgy, Luis said that this could represent more than 1 million ounces of silver equivalent production per year. For a company that has just started trading, that is a meaningful number. But the vision is bigger. The first phase will use the current permit, but later, with amendments or expansions, the company could move towards 800 to 1200 tons per day. That process could take around 1.5 to 2 years. At the scale, the asset could potentially produce around 2.7 to 3.5 million ounces per year. Luis' long-term objectives is even larger. His magical number in his head is 10 million ounces per year. Madre Sierra alone might not take the company all the way there, but it can be the first step. The plan is to use Madre Sierra as the base and then add other similar assets in Peru through M&A. So Titiminas does not want to be only one mine. The company wants to become a silver producer in Peru with 2, 3, or maybe 4 assets. A useful comparable, according to Luis, is Silver Mountain. He said Titiminas is today where Silver Mountain was 2 years ago. Silver Mountain took a historical mine, redrilled the resource, did the technical work, produced a PEA, financed construction, and moved toward productions. Titiminas wants to follow a simple path. The roadmap is clear. The plan is not to drill for 10 years. The plan is to redrill the historical resource, produce a modern resource estimate, complete metallurgy, prepare PA, and make a final investment decision, and then move forward financing and construction. The company started trading on April 15 and raised around 19.7 million Canadian dollars. According to Luis, that money funds the company through the final investment decision. It should be cover drilling, technical studies, the mineral resource estimates, and the PEA. The drilling plan includes 15,500 meters of underground drilling to confirm historical resource. This is the low-hanging fruit because the minor historical data already exists. The company also plans around 10,000 meters of surface drilling to test extensions, confirm continuity, and possibly add infrared resource to the PEA. The goal is to publish modern mineral resource estimate around 12 months after drilling starts, possibly around summer of 2027. In parallel, the company has started metallurgically testing. The goal is to confirm historical metallurgy, define the processing flow sheet, and prepare a basic plant design. It will also work on geomechanics and geotechnical studies because underground mining is not only about grade. You also need to understand dilution, ventilation, water safety, and mining methods. The company also needs to update plans for the plant, tailing facilities, and electrical concession. The objective is to produce a robust PEA around late Q3 or early Q4 2027. Luis made an important point here. For a small mine at this scale, he doesn't think that it's necessary to spend years and a lot of money on a full feasibility study before starting production. In Peru, many small mines are built using a strong PEA and then continue drilling and expanding while they operate. That is the model Titiminas wants to follow. This could allow the company to move faster, but investors need to understand the risk. A PEA is not the same than a PFS. It gives a development path, but it does not require all the technical risk. The capex for phase 1 is expected to be around 35 to 45 million US dollars. That will include the plant, tailing facilities, electrical connection, and infrastructure needed to support the mine. The company does not have all this construction capital today, but it says that it's funded through the technical work and decision point. After the PEA and final investment decision, the company expects to raise construction capital. Luis said part of this could come from equity, but he also wants to use financing from trading companies. This could be linked to offtake agreements, where a trading company provides financing in exchange for future concentrates delivery. This structure can reduce dilution for shareholders. Shareholder alignment is another positive point. Luis said that he and his family owns around 16% of the company on a full diluted basis. Another co-founder owns around 14%. A large UK fund owns around 9%. Eric Sprott is also a shareholder together with other institutional investors. According to Luis, most of the EPO financing came from institutional investors, not retail. This matters because in a junior mining company, alignment is very important. The social side is also very important. In Peru, many mining companies do not fail because of geology, they fail because of social conflict. This project is located on lands of the highly rural community. Luis explaining that he already had a relationship with this community from a previous project around 2014 or 2015. According to him, the community has been a good partner. Historically, the community preferred shorter agreements renewed every 2 years, but Titiminas explained that to raise capital and build a public company, they need a longer agreement. The company has now achieved a 6-year agreement extending to 2032, pending final formalization of the time of the interview. This is positive. It doesn't eliminate social risk, but it reduces it. Luis also said that central Peru is usually easier for mining than some areas in the north or south of Peru, where the conflict can be more intense. Every project is different, but for Titiminas community support, it's only the key reason why the project may advance. The team is also being built with technically, financially, and capital market profiles. Luis also explained that building the team has been harder than expected because the mining cycle is strong. This is positive for the sector, but also means higher salaries and more compensation for talent. Execution depends on people. So, what will investor watch over the next 12 to 18 months? The first catalysts are underground drilling and drill results. Investors should watch wherever the company confirms the historical grades and polymetallic byproducts. The next catalysts are metallurgy, the model resource estimates, and the PA expected to be around late Q3 or early Q4 of 2027. After that, financing become key. Investors should watch how much comes from equity and how much it comes from offtake financing. Then the seventh catalyst is M&A. Luis wants to build a large silver company in Peru, but acquisitions must be disciplined. Finally, investors should watch community and permitting. The current limits allow 350 tons per day, but expansion to 800 and 1200 tons per day requires a more complex process that could take 1.5 to 2 years. So, what is the conclusion? Titiminas is a very strategic public company, but it's not a greenfield exploration story. This is a restart story. The company is trying to take a historical high-grade polymetallic silver mine in central Peru and bring it back to production. The positives are clear. Madre Sierra has historical high grades, all underground workflows, infrastructure advantage, current small mining permits, a social agreement, historical metallurgy, exploration outside with 11 veins over more than 2 kilometers of strike, and a strong management alignment. But the risks are also clear. The results is still historical. It needs modern drilling. Metallurgy needs confirmation. The PA is not ready. Construction financing is not secure. CapEx still needs to be confirmed. The expansion permits will take time, and as always in Peru, community and permitting risk must be watched carefully. This story is attractive because high grades projects can move faster and need less capital than very large low grade projects. If Madre Sierra can really produce under a small produce regime, generate cash flow, and then expand, Titiminas could become an interesting and new silver producer in Peru. But everything depends on execution. The next 12 to 18 months will be the real test. Can the company confirm the historical reserves? Can it show good metallurgy? Can it publish a strong PEA? Can it finance construction without destroying shareholders? And can it use Madre Sierra as the first step toward building a large silver company in Peru? That is an opportunity, and also it is a risk. Titiminas is trying to do something simple to explain but difficult to execute. Take an all high-grade mine and make it new again.
Disclaimer: the content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact to a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.